Welcome back. Now, Reunert's acquisition of IQBusiness and a strong pipeline is boosting the group's confidence that it can still report an improved financial performance for the 2024 financial year. While the pressure facing South Africa businesses has increased since its 2023 financial year end, the group said its results were expected to be positively supported by the incorporation of IQBusiness. Company CEO Alan Dickson joins us now with further insights on the interim performance and on those expectations. Alan, an absolute pleasure and a good afternoon to you.
Good afternoon to you. Thank you.
Wonderful. Alan, maybe we can start off by reflecting on that income statement. We do see that both revenue and HEPS are up. Let's talk about what led to that.
Yeah, thank you. It was in your introductory comments, you mentioned it has been a bit of a tough environment. I think Transnet dealt us and the country a bit of a curveball in the first part of our financial quarter, which made life quite difficult generally across the group, which we did have to incur a few costs in order to meet our customer demands. And in Nashua specifically, we were actually not able to get the product in enough time to be able to meet our customer demands inside of the first half. But despite that, we were still able to put together a decent set of numbers that's largely underpinned by our electrical engineering segment, and specifically our power cable businesses, both in South Africa and in Zambia, had very nice performances. And that, together with our defense cluster and the inclusion of IQBusiness for 6 months, really led to the improved performance that we have seen. And it was those units that generated the growth that we see in our numbers.
Also, I'd like to touch on then IQBusiness and how the integration is going, and if that all is reflected in the set of numbers.
It is reflected in the set of numbers. So we acquired IQBusiness effective from the 1st of July 2023. So they were in our numbers last year for 1 quarter, but they are in for the full 6 months of this year. And we've been very pleased with the integration. We looked and worked very hard on the culture fit and the value fit prior to completing the acquisition. And I'm pleased that what we saw during our DD and engagement with management specifically prior to the acquisition has actually come true. As we've been very pleased with the management team. They've come across, they're mature, they're well experienced, and they have fitted into the Reunert environment very well. And they are fully integrated into Reunert and are performing well within our business. And importantly, one of the strategic reasons which really talks to the synergy and complementarity between their skills, their workforce, their service offering, and their client coverage with that of the asset we already had in IQBusiness has also played true as well. And that those two together now really give us a very solid and positive digital integrator that we think will be a leader in South Africa.
I also read, Alan, about the merger with Plus 1X. Just help us understand how that also plays into the overall strategy at this point.
Perfect. So within our ICT segment, what we call the Solutions and Systems Integration Cluster, which is where IQBusiness and Plus 1X currently sit. Digital transformation in this country and globally is a strong market trend that we're seeing all over the world, and we think we can play meaningfully in that space. So our strategy to move into that space and for that growth to provide support for our general ICT segment started out first by IQBusiness, which we've done over the last 3 or 4 years and has really performed very well. And now with the acquisition of IQBusiness, those two together are going to be able to accelerate and get better market share and grow in that space. So that acquisition of IQBusiness plays into that strategy that we have, and then together with IQBusiness, because of that synergy and complementarity, actually places them very well to accelerate and grow into that market space. And we've actually seen that validated in this 6 months, is that there's been a number of joint bids that have been put together to take account of that we've been successful on. And that, in our mind, really validates the rationale for the merge and also makes the relevance that we believe they will be successful.
Sounds good, Alan. Let's also then talk about the strong cash generation that you saw over this period and how that does feed into that balance sheet right now, and also how you're just feeling about the balance sheet at present.
Yeah, we're really pleased with the state of the balance sheet at the moment. If you just go back a couple of periods, I think like many corporates, we had to bolster our investment into working capital when the COVID supply chain came under so much pressure. Now, during FY 2023, we actively drove that out. We had believed the supply chain was in such a state that we could return to call it pre-COVID stock holding levels, and we drove out and generated significant cash last year. Of course, we then had Transnet, which threw us a bit of a curveball. So we put a little bit more working capital in to bolster that. But that efficiency that we brought onto that balance sheet last year has actually played out and continued to play this year. So we've actually seen strong cash generated by the group, and that's enabled us to pay a nice dividend. But we actually feel quite confident about the balance sheet, and we think we're in a good space at the moment. And the cash generation that we're seeing is actually good enough for all of our strategic needs, our operational needs, and to support the dividends that we pay.
Let's also touch on renewables and how that is rolling out, but maybe even how what you're seeing in your business, Alan, reflects the South Africa's renewables program at present.
Sure. So Reunert really focuses on the commercial and industrial market sector. So that's really businesses from about 1 megawatt up to about 40 odd megawatts worth of energy that they need. So it's not the small end. We don't play really materially in the residential and small commercial in any real way in our solar energy business. But so we play in that C&I space. And those are primarily businesses, and they are buying renewable energy for reasons differently to what you or I might do at home. They're looking at what the rates are going to be from Eskom going forward. Many of them sit on municipal networks where we're not entirely sure about how much investment is going into them. And we're increasingly seeing failures not caused by lack of generation, but failure of municipal grids and the like. So we're seeing a continued trend for businesses to have some alternate form of energy away from grid because they can control the cost. It's very effective to do so. They're able to ensure that they've got continuity of supply. And for those who export, they have green credits that they're able to utilize for that. And we believe that to be a long-term trend that is going to go for quite some time. And in our mind, it's actually independent of load shedding. So we think that market is strong. Our business plays in that space, and we've had much improved performance from that business this year, both in terms of the quantity that we have installed and that we own of these solar assets, but also in the actual underlying performance of those assets, which has been better this year as well. So we remain confident specifically about that solar energy business that we have.
And then let's talk about the outlook for the remainder of the financial year, Alan, what you're most looking forward to, and if you are maybe concerned about this operating environment, that the difficulties will persist.
I do think probably to the end of this year, I'm not expecting much sort of fireworks out of the general economy in South Africa. I think we would all be pleased to get the elections behind us and to have certainty around what the political dispensation will be. I think that will be positive for us all and get that distraction out of our way. But I don't think it particularly changes any of the macros in any meaningful way. So we expect South Africa to continue to be a challenging space. But in our world, Zambia is performing very nicely. You know, they have a very business positive environment, and that continues to operate well there. We have very strong defense order books, which is all exports, so it's completely independent of South Africa. And those order books are in excess of 18 months. We have renewable energy, which again, we think continues to fire irrespective of what the rest of the macros look like. And then we've got the inclusion of IQBusiness. So we think when we look at that, although South Africa generally is a tough space, we have these several other levers that we believe give us respite from it and give us confidence that we can deliver this increased financial performance in this year, even though the environment is relatively tough.
Alan, a pleasure hearing about Reunert's journey and keen to catch up in the next few months again. Thank you for your time today. And that was Alan Dickson, CEO for Reunert.